Well, hello, everybody. I'm Ed Parcaut, and we have Jeff. Is it Sipes?
Sipes, yep. That's what my mom and dad call me.
Well, I
Sipes,
just
get
wasn't.
back to your room.
I just called you Jeff all the time, so I didn't know. I want to thank you for coming on today. And the show is really, I wanted to know if credit repair works, right? And I forgot the works, but if it works, because I see so many credit reports these days, and a lot of them have collections on them. And I know, and we can go through a lot of different things, but I see them, and a lot of them, like I had one the other day that I called them, and I was talking to the wife, and they said they hired some company, and I'll just say that it has Lending Tree in the last part of the name, but it wasn't Lending Tree. And they supposedly are working on their debts. And I said, what are they really doing for you? And they're like, and then the husband picks up the call, and he's about ready to school me. And I'm like, no, I'm just trying to understand what they said they're going to do for you, because a lot of times they don't do what they say they're going to do. Some of these companies are not reputable.
Yeah.
Right.
It's big. Yeah. So 79% of credit reports have a mistake, Ed, which is kind of crazy. So the way credit repair works is information can be removed from your credit report as long as it's inaccurate, incomplete.
And that's the key, though, right there.
Yeah, inaccurate, incomplete, unverifiable, or outdated. So there's like 4 triggers or loopholes, if you will. So even if you were late, or even if you had a collection, if they're not reporting all the information, they can't verify your demand. If it's outdated, or they forgot to put a specific date or amount, all those are reasons to get something deleted. And so you really need to look at a credit report with a fine-tooth comb and make sure everything matches the other bureaus and all the date fields are filled in. Because if not, that's a great example of something you can get removed based on the Fair Credit Reporting Act laws.
So when you mean the dates aren't correct, are you saying like they haven't updated that they haven't updated in a long time? Or are we talking about actually the late date was wrong, or what are we talking about?
Yeah, so there's this complicated reporting system called Metro 2. And Metro 2 kind of gives reporting standards for all 3 credit bureaus. So say TransUnion is reporting you late in May, and Equifax and Experian are reporting you late in June. That's technically a FCRA violation. And because of that, you can potentially get the late payment off of a credit report. So we like to
not all 3, but just off of one of them, or
no, all 3. Yeah, because the creditor's in violation. Yeah, so because the creditor's in violation, then they have to pull it off all 3. Yeah.
All right, now, so people understand there's 3 different bureaus, and then I know it used to be this way, is where one would have the information and they'd sell it to the other 2. Is it still that kind of way?
Yeah, it's super confusing. So there's Equifax, TransUnion, and Experian, and about 65 to 70% of your accounts report to all 3. Some collection agencies and creditors only report to one. And so each one is independently owned and operated. And a creditor, whether it's a bank, a credit card, a collection agency, they have to apply to report to each credit bureau individually and be approved. And they also have a cost with reporting to each 3. So if it's a smaller collection agency, they might only report to one bureau. Or if it's a collection agency that makes tons of mistakes and violations, they might only be eligible to report to one because the other 2 won't approve them for reporting.
Okay, gotcha. All right, so let's get a lot of, people think that they can get stuff off their credit report that is correct. And I tell them, no, you can't. It has to be what you just said, those 4 things. But let's, a lot of people have a question. What is a credit score?
All right. So
and can you turn me down on your speakers a little bit?
Oh yeah, I sure can.
Bleeding back through a little bit.
Yep. So
I mean, I like hearing myself twice, but not really.
Yeah, exactly. So a credit score was developed by Fair Isaac Corporation, actually down in San Ramon, California, in 1956. They actually built the score to be predictive for risk, right? So banks want to know what their odds of getting paid are. And so Fair Isaac created this scoring system where the higher the credit score, the safer the ability to loan. And so FICO is the main credit score for any bank, whether it's a home loan, car loan, credit card. And your FICO score basically is telling the bank how likely are you going to default on your loan over the next 2 years. So that's basically what the credit score is. It's a statistical prediction of you paying back your debt over the next 2 years. And and there's lots of copycat credit scores out there too. I'm sure we'll probably talk about that.
You're talking about these guys, Credit Karma, FICO.
Yeah,
because a lot of people. Yeah. A lot of people,
FICO. Yep.
yeah. A lot of people ask, when they talk to me, well, my Credit Karma says I'm 695 and my Experian, they have it says I'm 720, but you ran my credit and you say I'm only 680 average. What the heck is up? And I try to
Yeah.
explain them. We all have different algorithms that we use.
Yeah, totally. So credit scores are a billion dollar industry. FICO is the main character, the main provider, the name brand of credit scores. And so the credit bureaus got jealous of FICO because FICO had a monopoly in credit scores. And so about 15 years ago, the credit bureaus came up with their own credit scores, and they call it the Vantage credit score. And so Vantage has the 1.0, 2.0, 3.0, and 4.0. And so no lenders adopted really the Vantage credit score. And so Credit Karma and credit monitoring systems that are online that are free, they're using this Vantage credit score. And so I've seen the Vantage credit score be 10 points off a mortgage credit score. I've seen it be over 100 points off. And so it's definitely not accurate. I personally have Credit Karma. I was talking to my in-laws. They're visiting from Nebraska this morning. And she's like, well, I want to kind of look at my credit history. And I'm like, hey, check out Credit Karma. You're going to get 2 of the 3 bureaus there, but the credit scores are not accurate. So you can look at your information. You can see a credit score, but those are called educational credit scores, Ed. So basically, if you just kind of want to look at a credit score and might be close, it might not, go to Credit Karma. Otherwise, if you want to know an accurate credit score, I'd recommend talking to your lender.
Yeah. What's good about it is it gets you to keep track of what's going on with your credit score. Because if you have Credit Karma and it drops 30 points and you're like, what happened? And, maybe you had a late payment or something you didn't know about, or something was inaccurately put on there, you can have it taken care of. And like you talked about, it's educational. So you stay on top of what's going on with your credit. And that's important. So you know what's going on.
Yeah. And it's free, which is nice. You just, the only thing, if it's free, they're making their money by selling your information. So you're going to get solicitations for credit card offers, car loan offers, mortgage offers. So just be aware of that. Nothing's free, right? Because you're paying for it with ads.
Yeah. Now, when we did talk about this, why is your credit score so important? And we talked about FICO scores difference, right? And you're talking about they look at, someone has a 740 FICO score and someone has a 640 FICO score. There's so many more times likely to go in foreclosure. I can't remember, it's 17%, or it's a huge number, and people are shocked. And that's why we have these scores, and people don't understand. When you ask them, I have a good credit score. What is it? 640. It's like, yeah, it's good, but it's not, it's not what a 680 for FHA. So when I look at credit scores, I look at where our loan numbers change differently, right? Different than what maybe you guys look at. I look at it, 680 is good for FHA, right? Because anything above that really didn't make a difference. But if you don't have a 700 plus for conventional, you don't want to go conventional. So because of the price point. So that's kind of how I look at the credit scores a little differently than other people.
Yeah, I agree 100% with you. And just like what you're talking about, banks set up what's called risk-based pricing, right? And so about every 20 points is what we see as different brackets for car loans, for credit cards, and then obviously you're the expert with home loans. But really, to have the best rates and terms out there, you really want to be like at 760 or 780. I don't really know of any bank that looks at anything higher than a 760.
760 is about it 760 and a $400,000 loan amount is where you get the best rate. Above that,
perfect. So if you're like me and you're trying to game the credit score and get to the 800 mark, I can kind of give you guys some tips on that. But once you get to the 760 or higher, it's considered the promised land of credit scores. So it really doesn't make a difference if you're 770 or 807. You're going to get the same pricing.
If you went to college, magna cum laude, you can't really go any higher than that. Why would you? You're already there. Move on.
Yeah, exactly.
All right. So a couple things that I run into a lot with people. I'm real big on, let's keep your balances at like 10. Most people, I say, try to keep them under 50%. If you could keep them at 10%, great, but most people can't. But that's because the more you put on there, the more it takes away from your FICO score. But there is a gentleman out there who tells everybody to cut up their credit cards and cancel them. And I tell people that is the worst thing you can do, because you lose all your credit from the history of that card when you do that. And I get in arguments all the time. Well, you can go manual underwrite, but why do you want to? Right.
Yep.
So don't do this. I assume.
So this is the deal. FICO, which is the credit score lenders use. So if you're going to buy a house with a loan, a car with a loan, or if you want to borrow money, FICO is the score we care about. FICO requires an open account with at least one update every 6 months, or your credit score will go to zero. And so when your credit goes to zero, I literally talked to a lender this morning about that. He's like, I have a client trying to buy a house.
Inactivity.
No activity. Yeah. And so if you want to get a loan in the future, then you have to play the credit game. And so we recommend using 10% or less on your credit card. So if you hate credit cards, just use 1 or 2, maybe 3, charge gas on there. Well, gas might get us in trouble depending on your limit.
Right. Secure credit cards that definitely get you in trouble.
Yeah. So try to use 10% or less, because at some point your credit card's potentially going to close on you. And we'll probably talk about that in a second, but
that was the next question. Inactivity. Will they close it out on you?
Yeah. And so, that happened to me. We had multiple credit cards, and one of our older credit cards gave us a notice and like, hey, you haven't used this card in a while. We're closing your credit card. And I was like, oh, I'll be able to call them and negotiate that back. Well, I tried, talked to the manager, and they're like, sorry, sir, there's nothing you can do. We closed your account. So yeah, you want to use your cards at least once every 3 months. Like I said, try to keep lower balances on them, because one maxed out credit card can literally lower your score by 40 points. And so, and 40 points, Ed, you would know on a loan, I mean, it could mean, a few $100s a month on a payment, depending on how much you're trying to borrow.
And it could also mean whether you can qualify or not qualify. Right.
Yeah. And with interest rates going up, your credit score is more important now than ever, because it impacts how much you could borrow, right? So with a higher credit score, your payment's going to be lower, so you could borrow more for a home loan. With prices going up and rates going up, we definitely want to make sure we're in the best position financially if we find, our dream house or the house that works best for your family.
Right. You must be listening to my radio shows, my past one, because I've been saying that for a year now, ever since the pandemic. Because during the pandemic, your FICO score is so much more important than any other time, because at that point, lenders were like cutting, raising their minimum FICO scores to do different programs. And that was, because we had no idea what was going to happen. Right.
Yep, exactly. And
all right. So we talked about they will close your credit card due to inactivity. And so make sure you utilize them, because you get the most credit from how you utilize actual credit cards, correct?
Yep, exactly.
Am I correct on that? Okay.
If you're trying to game it, I said earlier, if you're trying to get the 800 plus credit score, FICO wants to see around 6 accounts open. They want to see 1 to 5 credit cards. They like to see a car loan and a mortgage. Balances on your credit cards represents 100 points on your score. So if you have 4 or 5 maxed out credit cards, your score is lower by about 100 points. Yeah. Once you pay those down, your score will rebound. But until you pay down the debt, you're going to be your score is going to be lower than it should be. So now, and I'll bring this up because it's important to know. If you have a credit card and you pay it off in full every month, most credit card companies are going to show on the credit report whatever shows on your credit card statement. So if you charge 50% on your credit card and you get your statement and you pay it to zero, your credit report's not going to show zero. It's going to show that 50% utilization. So that will impact your score a little bit. So two things you could do is you can pay your credit card off, multiple times a month, or you can find out when your statement closes on your credit card and then just make your payment before it closes. That way, when it reports to the bureau, your score is as high as possible.
I heard that if you do it before it reports, then they'll show that inactivity. Is that correct?
If it has a zero, then
right. Like if you pay it right before it reports each month, then it goes to zero, and then that would show an inactivity. Correct?
You're correct. Okay. And so in a perfect world, you want to pay it down to have a small balance.
Right. Just pay it half of it off in the middle of the month, and the rest of it right when you get your statement.
Yeah, that's a great strategy. And Ed, too, we're only talking, the only time your credit score matters is when 30 to 45 days before you're getting a loan, right? So whether you're applying for a house, a car, credit card, a school loan, make sure 30 to 45 days before you apply that you're making sure your credit card balances are as low as possible, because that will is the easiest way to improve a credit score.
Yeah. And you say that, but the problem is most people get hit with, hey, you got a 60-day notice or a 30-day notice to get out of this house if you're renting. And they're like, but my credit's not there. Because I have someone who hit me up at Rotary this morning, the same thing. And it's like, so they're going to pay them down next week. And then I'm like, okay, worst case, we can do a rapid rescore, the whole 9 yards.
Yeah. All right. So, and to your point just there, Ed, is if you pay your credit cards, it does take up to 30 days to reflect on the credit report.
And some of them can take longer.
Mm-hmm. Yeah, if you're looking at Credit Karma, it could be outdated.
No, I'm not. In just regular credit report, I've seen it where they're a month behind and sometimes a little bit more than that, depending on who they are.
Yeah, so like especially collections. If you pay a collection, it can take up to 60 to 90 days to report. But paying a collection does not improve your credit score unless they agree to delete it for a payment.
And if they don't agree to delete it for a payment and you negotiate it paid and then it updates, you're going to get negative. You get more negative credit, or you'll be the same amount of negative credit.
Great question, Ed. So let me set some framework on that. A collection impacts a score usually up to 80 points right when it hits your credit. And then it stays on your credit report for a total of 7 years. Each month it ages, it impacts the score less. And so say the collection's 6 years old and it's not impacting the score very much. Say it's like 10 or 15 points. And then I go and pay it off and the collection agency re-ages it like it just happened. Your score could literally fall by 60 points.
Okay, so I've been telling people don't ever touch it unless we can get a deletion letter. And then the problem is most people pay it and then try to get a deletion letter. It's like, no, it doesn't work that way. You got to get it agreed to first. And so so a collection will fall, what you're saying. So the question I have, and this was asked, when do collections fall off your credit report? You said in 7 years.
Yep. It's the 7 years from the original date. Now, it doesn't always happen that way. Now, if you want to know that date, there's actually a website. It's the only website to find that date. It's annualcreditreport.com. It's a free site. We can go there and pull our credit. If you go to TransUnion, that's the easiest one to read. It'll tell you the month and the year that the collection's fallen off your credit. So that'll tell you that 7 year mark. So legally, collections can be sold or transferred. If they are sold or transferred, it's not supposed to start the 7 years over. So say if I go to the dentist and it's, June 22 and I don't pay my medical bill, it's going to be, June of 2029, that collection should fall off my credit report.
But they could technically sell it to somebody else. And then does that start the whole 7 year over, or is it goes back to the original date again?
Legally, Ed, it's supposed to be from the first original date. Doesn't always happen that way. Doesn't always happen that way. Yeah. Like I said earlier, 79% of credit reports have mistakes. So we see bankruptcies, collections staying on longer, and so that's something that we can help with. We can look at that. If collection agencies are notorious for breaking laws,
really? No way.
Calling people where they're elite. We
making you cry, making you pissed.
Yeah, people have called us and said that a collection agency said they're sending the sheriff to their house to arrest them.
No, I had the Social Security Department call me yesterday.
Oh God.
Officer so-and-so with the Social Security Department. Yeah. Okay. Yeah. All right. So collections, 7 years.
Yep.
Technically, they're not supposed to be resold. They should come off. And if they don't, talk to you. What was it? That was this. We did the sell your information. I want to make sure I got all these questions answered.
Oh, yeah. And then maybe I can talk a little bit about that too, Ed.
Medical. I want to talk. That's what it was. I wanted to. All right. So I don't have that on here, but a new law that came into effect with medical. Yep. Everybody thought all their stuff would fall off medically, and that's not the case. So
every credit score is going to 800 in July, Ed.
Is it? All right. Tell me, how does it affect the new law with the medical collections?
Yeah. And so there's been an issue for years with medical billing. And so the regulators decided to create a new law, which actually starts in July. They didn't give a date, whether it's July 1st or the end of July. So I'm just saying, hey, by the end of July, paid medical collections are no longer supposed to report on your credit. So I would check your credit report through annualcreditreport.com. That tends to be updated the quickest. Credit Karma, not so much. But check and see if you have any paid medical collections. They're not supposed to be on your credit as of August 1st. And then a year from now, medical collections under $500 are not supposed to report on your credit either. So phase 1, paid medical collections will be deleted by August 1st of this year. And phase 2, by the end of July of 2023, medical collections with a balance of $500 or less can't report on your credit report. So that should be a big increase because FICO looks at a collection, whether it's paid or unpaid, the same for home loans. And so your paid medical collection could be impacting your score up to 80 points. And so by getting that deleted, be a great time for Ed to rerun your credit. So have him rerun your credit, see what your new credit scores are. And then if you're eligible, you might have better pricing and might be able to borrow more money for your dream home.
Yeah. I just want to make sure people understand that, because all right, and the new law is also that if you have a medical bill, they can't put that on your credit report for a year, right? They have to work.
Exactly.
Because it used to be you didn't work with them in 30 days, it was on your credit report on them, you know. It seemed that way. It could have been 60, but it seemed like it.
Yeah. Ed, you've been reading up on that, man. That's great. So
I've been
exactly
doing this for 22 years or 5. I can't remember. It's been forever. So it's important to understand everything. So when I look at someone's credit report, I can tell them where we're at. I don't have to rely. It's just, the worst thing is I remember stuff.
Yeah.
That's the one thing. I read it, it's there. Yeah. All right. So we did that one. All right. So let's talk about how to improve the credit scores, right? So this is one of the questions. If I don't have a credit score, what is the best way to get one?
Perfect.
And say I need one in 30 days because I have, I just got a notice and I just never use credit. I paid cash for everything.
Yeah. And I had a conversation with another lender this morning on this. So we recommend doing 3 things. Opening up a secured credit card. You can do that through your credit union. We actually have our own secured credit card. It reports within 7 days to the credit bureau. It's a minimum of $200. So I can.
Right. And if you want that information, do me a favor, text Jerky to 33777 and they'll ask you your name and your email and I'll send it out to you. So you have it. So that way everybody's not contacting us through here. But if you text that, we will get that to you.
Perfect. So step 1, open a secured card, charge 10% or less of the limit. Step 2 is talk to your significant other, your friend, your family about adding you to their credit card as an authorized
That was the next
user.
question. How'd you know my next question?
Hey, I've been reading ahead there.
So that was a question because, all right. So I thought, because I've been in this business for a while and for the longest time, I remember in 2005, people would add you to their credit card, charge you $3,000 or whatever per month to get you on there to get a score. That's illegal, by the way.
It is.
Yeah, very much so. Fannie and Freddie do not like this thing. They call it, we won't get into that, but you can be added to an authorized user on another person's credit card, and it will give you credit, is what we're saying, for mortgage.
You inherit their entire payment history.
Right.
So,
and that's good or bad.
It could be good as long as it's an older account, no late payments, low balance.
Right.
The reason is also true.
Right. Yeah, I had some people who had a guy who didn't have it, so they added it on one of their cards, and they had late payments, high, and it's like that didn't help him. No, it's got to be a good credit card, not a bad credit card.
You're exactly right.
So that works still. That's all I want.
It does. Now, let me give some context to this. FICO has over 60 different versions of their credit score. And so the one used in the mortgage industry is an older version, and it still recognizes authorized user accounts, and it still helps people's credit scores for mortgage loans. But the newer versions, like the FICO 8, FICO 9, the FICO 10T, these are brand new versions FICO's released. They ignore authorized user accounts. So if you're trying to get a home loan, authorized user is a good tool or hack, if you will, to improving your score. But like Ed said, the FTC and the CFPB, those are regulators. They're cracking down on companies that are selling these trade lines. It's illegal to sell these trade lines. So don't pay for those. Talk to a friend or family member. See if they can add you. Make sure the credit card is a low balance. The older the history, the better. And obviously you can't have any late payments on it.
And it was going to take probably 25, 30 days for the next time that they report for you to actually be on there and on your credit report.
So, exactly.
So when I tell everybody, whoever's adding you on their credit report, on their card, ask them to ask the people, when do they report to the bureau? So we know when it's going to be effective.
Great job, Ed. I could tell you're a veteran. You know what you're doing.
No, I just want to tell people the right story so they know what they're dealing with. All right. So I think we hit again. All right. So I want to go back. So you have, if you're trying to build your credit, you guys have a credit card that's a secure credit card and it reports within 7 days. And I said, if you guys want that information, text Jerky to 33777 and we'll send you that information. I sent it to one of my clients yesterday, and then I got a notification when I just clicked on your thing that said that person's first name had just signed up. I was like, wow, that's fast. It was just weird. So I'm not going to say their name, was like, just sign up for here too. And it's like, and then you also have an installment loan that does the same thing, right? That you guys have, but how long does that take to report?
Yeah. So the installment loan, you can set it up. It's a payment from your checking account to a savings account that you can close later. It takes 60 days to show up on the credit report, but it looks like a car loan. And just for some context, if you have no credit cards and you open a credit card, you'll probably see a net gain of between 20 and 30 points in your credit score. And if you don't have a car loan or school loan and you open up an installment loan, that's what it's called, you should see a net gain of 15 to 20 points. So by adding a credit card and a car loan to somebody that doesn't have any open accounts, I mean, you could see a nice significant increase in the score.
Right. The other thing we have, and you do too, and we can send it out to, is adding your rental history to your credit report. That usually adds about 40 points.
Yeah. Yeah. And the cool thing about that is they can go back up to 24 months and add up to 24 months of payment. And if you've ever paid late, they don't report late payments.
Oh, okay.
And now the only thing that we've experienced with this, I don't know how you've seen, but is in order for it to report, your landlord does have to get back to the company with verification. So if the landlord doesn't get back, then it won't report, but you can add up to 24 months of rental history to 2 of the 3 credit bureaus.
Okay. But again, with that, because I've seen a couple of them where they only reported 1 month, right? They only reported the most recent month. They didn't report, which was still enough to get the 40 points. So it's a great idea. And again, if you guys text, I know I'm not trying to just promote this jerky thing, but I want to make it easier for us to get this information out. Do that, text it there. All right. So I have one more question. And I hope I worded it right. Should you use Boost?
Oh yeah. Experian Boost. Yeah.
Is that, is that utilized in mortgage rating? Yep.
So Experian Boost is a credit boost, if you will, that Experian created a few years ago. I signed up for it to kind of test it out when it first came out. You have to go to Experian. You give them access to your bank account. Experian goes into your bank history, and they look at loans for, they look at payments for credit cards, also for cable, and then they add those to your credit report. Now, the Experian Boost is recognized by newer credit scoring models. The FICO mortgage doesn't recognize Experian Boost. So
that's what I was wondering. So don't waste your time if you're going for a mortgage loan. You should not use Experian Boost if you're going for a mortgage. It's not going to make a difference.
Correct. Yep. Right. And Equifax was hacked a few years ago. And so if Experian gets hacked and Experian will have access to your bank account, it opens you up for a little more fraud, unfortunately.
Right. I always said that it was a backdoor way for the utilities to get their stuff on your credit report so that you would actually want to pay them on time. And then eventually go, hey, everybody has this there already. We might as well start reporting.
Yep, exactly. So,
and if they start reporting, then we're going to have to start hitting you with that debt. Eventually. But right now 100%. We don't. It's still not part of it. So,
yeah. And then for the listeners, I'd like to offer, if they go to our website at bluewatercredit.com, we've got 2 ebooks they can download. The 2022 credit score guide to kind of give you guys some tips on how to navigate through difficult times. And then the second ebook is how to get 30 points in 30 days. That's going to have many of the strategies we talked about in there, but they're free to download. You guys can go there. And then we've got a ton of free resources, over 300 blog articles. So check it out. If you have any questions, you can definitely contact our office. You can also schedule a free consultation through our website as well if you wanted us to look at your credit report and give advice.
Yeah, because there's some people who have a lot of stuff on there that they should get help because it's going to stay on there. But if you guys won't put anybody in the program that you can't do anything for, right?
Oh no, and we have 100% satisfaction guarantee. So we always do a free consultation up front. We set up expectations, and then we've worked with over 13,000 clients, so we know what is realistic with credit repair and what isn't. And so if it's something we don't feel is a good fit, we're going to be upfront with somebody on that.
Yeah. The reason I asked that is because not all companies are that way.
Well, unfortunately, yeah, a lot of companies are just like, hey, sign up, we'll fix it. And then you can't get a hold of them anymore. So check out their reviews, make sure that they're licensed and bonded, make sure that, you're dealing with somebody that's going to do what's in your best interest.
Yeah, because I see a lot of guys on the same thing with the mortgage industry and your industry on TikTok saying they did this or did this. I can't believe I did. And it's like, okay, stop wasting our time by telling people you can do certain things you can't do. You might. I've known some companies who said I can get something off, but it'll be back on in 30 days. So we'll get it off now, and then you can do your loan, but I'll be back on. Why go through that?
Yep. There's a lot of regulation happening in the credit repair industry right now. So if you are seeing videos or advertisements with, these outlandish offers, just be careful. If it sounds too good to be true, it probably is. And like I said, just work with somebody that's been around for a while, check out their reviews, make sure that what they're telling you makes sense, and then obviously do what's best for your situation.
All right. Sounds good. Anything else you want to add for today before we go? I think we hit a lot of stuff.
Yeah, we gave a lot of info. No, I'm excited to do this, and hopefully the listeners got some great information. Feel free to call our office if you have specific questions. And then, appreciate your time, Ed, and the chance to talk with your audience.
My pleasure. And I'm sure everybody will. And if you guys like what we do here, make sure you follow, like we always say. And thanks for watching. And Jeff, thank you so much for being here today.
You bet. It's been great.
All right. Everybody have a great day.